Welcome to this live event with GreenMobility and the company's CFO, Anders Wall. Today's agenda is the strategy update, which was announced yesterday, and the different outcomes from this update. So, Anders, before I hand over the word to you, I will just remind the audience that you can ask your questions to Anders. You can write them down here in the platform in Danish or English, and I will ask them to Anders after his presentation in the Q&A session. And with that, Anders, I will give the word over to you.
Perfect. Thank you, Kasper, and welcome everyone for this session on our strategy update. As Kasper mentioned, we announced yesterday. So I will go through the different parts of it and also try to elaborate a little bit on the implications and the actions that we will take on short term and the results expected on a longer term. Initially, as we also said yesterday, we are realigning our strategy to focus more heavily on Denmark, which is our original market. Like that's where we've been for more than 7 years now. It's also our most mature market and also where we have profitability in Copenhagen. Here we see the potential to grow even further. And of course, this is also tied to the exit of our main competitor here in Copenhagen. That's why we've chosen to allocate and focus our resources here to grow an already strong market. As a consequence, we've also chosen to close or sell our markets that are not profitable, or at least 2 of them where we see the outlook is still too far out. And as sort of you can see on the map, those are the ones that have faded dots. I'll come a little bit back to them, but in Helsinki in Finland, Amsterdam in the Netherlands, and also a reduction in Belgium. The key focus for us, of course, is that we want to bring GreenMobility into profitability. And that is a very firm ambition and goal for GreenMobility coming into 2024. So the markets that we're closing, Finland, Netherlands, the presence in Belgium, and maybe to just comment on Belgium initially. Today we are operational in 3 cities in Belgium, so Antwerp, Ghent, and Brussels. We started Belgium a little more than 3 years ago, where we initially operated in Antwerp and in Ghent, and then we added Brussels later on. We've chosen to reduce our activity in Belgium, but remain in Belgium. It's been one of our oldest international markets, and also one where we still see a strong performance, but we've chosen to, as I mentioned, to limit it, and that means that we will reduce significantly in Brussels. We essentially more or less pull out of Brussels. We'll still have a presence around the airport, but then focus on Antwerp, where we've had a strong and growing business over the years, and still have a presence in Ghent as well. But reduce the business there. We still believe in Belgium. Essentially, we also believe in the other markets. Reality is simply that the outlook and the growth is not fast enough. Then Copenhagen. Here we will expand our fleet and grow the business further. And maybe just if we dive into Finland and Netherlands, those markets we've chosen to say we will either sell or close them, and essentially that's a matter of how can we find the best solution. We are in dialogues with various partners in both markets, but the goal for us is that we want to exit those 2 markets, and we want to do it as fast as possible. We do expect that the cars we have in these markets, we will, by default, we'll move them to Denmark. Of course, it depends a little bit also on possible selling of the business, but for us, the plan is that we will move these cars. And of course, it's also tied into the growing part of the fleet in Copenhagen, where we want to increase the fleet, tied to the exit of Share Now in Copenhagen. We've moved cars before, so that's a relative manageable task, and we can do it relatively smooth. We did it also when we closed Sweden. We moved cars into Denmark and also between other countries. That is still one of our big values, that we have the flexibility in our assets, that they are generally movable. Maybe to comment a little bit on Finland first, and the Netherlands. Finland is a market that we've built up ourselves. For a long period of time, we were one of the only operators there. We have seen growth. We've also increased the fleet several times, but we still see a challenge in reaching profitability within reasonable time. There is growth in the market, and I'm also convinced that electric car sharing has a future in Helsinki. But for us, it's a matter of bringing the entire group into profitability, and here we see that the Finnish market will simply take too long. Of course, this is both for Finland and Netherlands. It's also tied to a lot of external factors that we've seen, that many companies have seen over the past years, and in comparison to that, simply we see that revenue is not growing fast enough to account for these increases in cost. Netherlands is a little bit similar. Here we entered the market at the beginning of last year by acquiring a local competitor, and also seeing growth. We increased the fleet as well to support actually a relatively large market, but I've also seen that the growth is not moving fast enough. So the same sort of decisions have made for Netherlands and Finland. In that sense, they're quite similar, and also here it is I would say very sharing mobility friendly market, in the sense that there are other operators and also looking to potentially sell the company, or ultimately then we will close it down. If we so those are the markets that we close, but looking into Copenhagen as our main market, here we see actually a big upside, and I think that's the positive side. And it is of course it's never nice to have closed markets, but it's also something we believe is absolutely necessary. But on the other side, we see a very large potential in Copenhagen. We are profitable in our operation here with 600 cars today. As announced recently, our main competitor, Share Now, is exiting the market. Today they have around 600 cars. We've said initially we want to increase our fleet by 400 cars. We are of course ready to increase further than that, but step one is that we move our fleet to 1,000 cars. With this, we want to be a very clear market leader in Copenhagen, and I think already with the exit of Share Now, we will be a market leader, but we want to emphasize that and grow even more. Of course, the question is, can we ensure? How can we quantify that we will still see the same revenue per car, and thus also profit per car in Copenhagen? I think there are a few elements in that. Of course, we know that Share Now has had strong revenue in their cars, and if you the basic logic you would say is you move those cars from the market, there will still be a demand for shared cars. So in that respect, we assume the same level. We assume that we have to replace a supply in the market that is already there, and we are quite confident that they are at least at the same revenue level per car that we are. So from that perspective, I believe we will more or less from day to day we will take up the same revenue. Of course, we do have other competitors in Copenhagen, and I'm sure they are also looking at this in various forms. The big difference is that we and Share Now are what you call free float car sharers, which means that you can find the cars anywhere in the streets. You don't have to end the trip the same place you picked up the car and so on, where our competitors are generally they are station based, meaning that you have to return the car. So it's a different form of car sharing, and while I'm sure they will look for opportunities as well, it's still a different business model, and there are limits to how much they can expand their fleet, at least in the current setup. But at the same time, we are also, you could say that we're a little bit conservative, because we're not adding 600 cars, which is equal to Share Now's current fleet. We've said that initially we want to add 400 cars. So assuming that there may be some of the market that we can't cover. But let's see, there's definitely potential for more. And Copenhagen continues to be a growing car sharing market in general. And I think one part that we're also interested in seeing the effects of is that we know from next year, parking fees will reapply for electric cars in Copenhagen. So I actually expect we'll see a change in private electric cars in Copenhagen, which could potentially also have a positive effect on our business. So looking at it from a perspective of our main competitor exiting the market, they're leaving a big gap in the market. We want to fill that gap as soon as possible. We believe that because there is already a market, it's not something new we're building. Then we can replace and we can sort of pick up that revenue from day one. And maybe just to end Copenhagen, I got a question the other day that confusion in terms of numbers of cars. We are, as mentioned, we are expecting to increase the fleet in Copenhagen to at least 1,000, which means we need 400 new cars. Of those, we expect to move 300 from our international markets. So of course, we still need to add another 100. Parts of those are being in-fleeted at the moment. We've just announced that we will put in 50 Polestars. We already have a small part of Polestars today in Copenhagen. We are in the process, actually, as we speak, of in-fleeting more Polestars. So that's part of it, and we will see other cars as well. Generally, I think when we look at the fleet, anyone who knows us will know that we have a lot of Renault Zoes. We have started a process of mixing the fleet more. I think what we see now is that there is a demand from our customers of having different types of cars for different purposes, short trips, longer trips, with the family, without the family, small cars, because all these elements that we see. So we are definitely in a process where we will mix our fleet more. We will have several different car types going forward. It's not going to happen all overnight, of course, but there is a clear focus from our side as well to diversify our fleet somewhat more. Polestars is a good example. We've also brought in some additional cargo vans, bigger cargo vans, Mercedes EV. We just brought in some Peugeot partners in the cargo van section as well. So, and we will do the same in normal cars as well, diversify that more and more. But that's going to happen next year. But definitely, I think that's the nature of it. We've also seen that the opportunities within cars, electric cars specifically, have changed a lot in the past years, and I would say especially maybe just the last half year, much more OEMs are bringing in smaller EVs. We know that more are coming in the coming year as well. So it's something we are looking very much into. Yeah. Of course, all of this has an effect when we look at our guidance, our result for this year, closing markets will have an impact on our revenue and our result from 23. And of course there are elements of closing down these markets that will also happen next year, of course, if we're not able to sell them. The markets that we are closing will be already in our 23 report will be treated as discontinued business, which is also why we are adjusting our guidance and taking these businesses out of our guidance for 23. So we now expect an adjusted guidance of between 93 to 98 million Danish kroner and a net loss of 25 to 35. This is based on the continuing business. And so while of course it's a little lower on revenue, of course, because we're taking out some markets, it's also an improvement on net loss. Then of course you could ask and you could argue, okay, so what is the outlook for 24? And we've chosen not to sort of be too specific on it, but I think one clear goal and for 24, of course, is that we bring the group into profitability. That's the overlying goal of the actions and the strategy change that we're making at the moment. So that's one part, and of course, to a high degree, driven by our Danish markets, where we are profitable, and having that impact the entire group. But of course, the same focus on Belgium. Belgium also needs to become profitable. That's a clear goal. We don't want to operate markets that are not profitable. Looking a little bit ahead, and I think that's it also comes as an implied element of our strategy change. For quite a few years, we've been growing and opening new markets. We've also had a clear aspiration of being in many cities, and fundamentally that aspiration hasn't changed. But reality, of course, is we have to pause our international expansion ambitions, at least for now. The key focus is to bring the company into profitability. It's very simple. It's a clear mandated task. Once we're at that point next year, then of course we'll start looking at new markets again. But it's something that is it's not a key focus at the moment. It's really consolidating primarily in Denmark, and then also with Belgium as a market. That was a little input on my side, following up from the message yesterday. Kasper, I don't know if you have questions.
Yes, we have a lot of questions, so let's start with them, Anders.
Yeah.
First of all, you mentioned the competitive landscape after the exit of Share Now has, of course, changed a lot in Copenhagen. But can you maybe elaborate more on this? There's a question about the competitive landscape in Denmark after the exit of Share Now. So you're looking to be a market leader in Copenhagen, or extend your market leadership. But what about other competitors in Copenhagen?
Well, naturally, I don't know what goes on in their boardrooms or in their management rooms, but so I can only guess. But of course, we see various competitors. We've GoMore, Let's Go, Hyre, Kinto as well. So we have several operators. Their primary business has been, and I assume still is, more station-based, where they have fixed parking spots for their cars. So as I mentioned before, it is a slightly different business model than we have. I think in general they are ideal for longer trips, something that you plan ahead. Where we are more day to day. We have a more dynamic movement of the fleet, and you can do within our zone, of course, you can do more or less what you want. So I think, sorry, I think we will continue to see movements from our competitors as well. I expect nothing less, and I think they would expect the same from us. But for now, we don't see any other free float competitors in Copenhagen or in Denmark for that matter.
Okay. And then we have a question regarding the ShareNow. Have you considered an acquisition of the customer base from ShareNow? If not, do you know if any of the assets or customer relationships has transferred to any other competitor?
As far as I know, of course there is definitely information I don't know, but ShareNow in Denmark was a franchise of a. Sorry, the light went out here where I'm sitting, so maybe it went a little bit dark. ShareNow in Denmark was a franchise of the. It was a franchise operation, and which means they are tied into the global or the European ShareNow. Your ShareNow platform. So to the extent of my knowledge, then the customers, the data, the platform itself is the property of ShareNow globally. So the franchisee in Denmark, Arriva, and I think that's maybe also important if people are not aware that in Denmark the franchise was operated by Arriva, and because Arriva was sold, then they're not interested in continuing this business. They will, I expect they will most likely have to hand that back. They are not able to sell it. We would be happy to look into it, but I'm also convinced that we have some overlap of customer bases already. That's at least what we hear from our customers. But it's definitely something we're open. We've also had a dialogue with ShareNow in terms of their fleet. If there are any of the cars that are interested in continuing in the cars, if we can continue operating some of these.
Yeah. All right. Then we have a question. I think you mentioned it, but just to clarify for the person asking it, will you transfer all the Netherlands cars to Copenhagen, or sell them, or on end lease contracts? If selling them, is that what results in the profitability?
Well, it's not completely decided yet. As I mentioned, the default plan is that we will move them, but it depends also. I would say it depends on a couple of things. It depends if there is if we end up selling the company and the buyer continues that fleet, then of course the car stays there. That would be a simpler solution. And then ultimately, then it's if not selling the company, then we're looking into either selling them locally or bring them to Copenhagen, and that ultimately depends a little on the value of the cars versus the market value currently. Yeah,
and I think we have almost similar question in terms of the planned divestments. Are you in current engagement with prospective buyers? I think that's you touched upon it here, but I don't know if you can say anything else.
We are, of course, we have some dialogues ongoing at the moment, and I can't sort of disclose any more on it because it's still early in the process.
Of course. And you also mentioned the fleet and the different mix of that in Copenhagen. And we have a question here. Okay, I think just you can elaborate on it. Are you looking into a new mix of cars in your fleet in Copenhagen? Maybe you can put some words on what you aim for or what you're looking into in terms of the consumer. Do they have a different perspective on how they use cars, share cars now, or what do you see here?
Well, I think the interesting part, or the historic part, if you like, is that when we started GreenMobility, there were not that many. There were very few EVs available. Let's be clear, there were 2 or 3 models available. So it was not really a big choice. We've been very happy with the Zoe. It works very well for what we do. But over the years, car sharing has grown and developed. It's now something that everyone uses, independent of age, where you live, social, whatever, income class, all that. But as people are getting more used to having car sharing and using it for a variety of tasks, then there will also be a need or even a demand for various types of cars. So maybe the Zoe is too small if you want to take the whole family for a longer trip. Maybe you want a more premium car with more features on it than the Zoe can offer, and so on. And that's the direction that we are moving towards together with the market. We've seen it very clearly with some of the premium cars we have already, and now it's a matter of transitioning the fleet. There are so many new attractive electric cars on the market, which ultimately gives us a lot of benefit. In terms of where we will end, I think that's probably I can't say that because it's a dynamic process. But what we're looking into is expanding on the premium segment. We will still have, let's say, a Zoe type of car. It could even be more smaller cars. We've seen from various OEMs that they're introducing micro cars. It's something we've been looking at as well. Maybe not ideal for the Danish climate, but it's definitely something we look into. And you can also have sort of a mid-sized car, maybe with a larger trunk for more bags if you want to go on a weekend trip and so on. So there will be different sort of sizes of cars, but there will definitely also be more than just Renault cars in the fleet.
Yeah, okay. And moving to Belgium, we also have a question here. And again, you touched upon it, but let's move more into Belgium. Why are you staying in Belgium as the only country outside Denmark? Maybe you can tell us more about the countries you are in, and what is your view on this market going forward?
Yeah, I mean, we've chosen to stay in Belgium. As mentioned, it has been well, for one, our biggest international market, but also one that we've seen strong growth in over the years. But we've chosen to refocus on Antwerp and partially Ghent as well, where we started the business. Antwerp was I would say always a good city, good market for us. We saw it very clearly coming out of COVID. Rapid growth in revenue per car in Belgium, and specifically Antwerp, and has clearly proven a bit more challenging in Brussels. So that's why we've chosen to limit that market. Of course, we stay there because we believe that we can bring Belgium into profitability soon as well, meaning also next year. And then there's definitely a value in Belgium and potentially growing that further. But for now, it has one very clear goal. And I think that's the same for the entire group, and also what ultimately drives this strategy change, that we see some clear we have some clear advantages in Copenhagen, of course, to some extent accelerated by our competitor leaving the market. But it opens up a very interesting opportunity for us, where we can really grow the business and not least grow into a stronger profitability.
All right. Then we have a question: will you raise funds in 2024?
Well, it's something that we also mentioned we're looking into. How can we strengthen the business? How can we accelerate this? Are there additional opportunities? So it's definitely something that we are keeping open, and something that we are exploring as well.
All right. And the last question, I'm not sure what you can say about this, but I would ask it: when in time do you expect to reach positive cash flow for the whole company?
Well, I'm not going to put a month on it. I think that would probably be a little bit, but of course, looking into 24, when we look at the continuing business, that not only profitability, but it should also generate a positive cash flow.
Yeah, and in terms of that, maybe a follow-up question: when do you expect to announce your guidance for 2024?
Well, of course, latest by our annual report, but we may announce it soon as well. I think I would like to see some traction on these two markets. If we're able to sell them on sort of short time, then maybe that can prompt an earlier guidance and announcement for 24. But we need to have a little bit visibility on those two processes.
Perfect. Well, I think we went through all the questions, so let's finalize the event here. Thank you very much for the presentation, Anders, and thank you to all of you listening in and asking the questions. Have a nice day.
Thank you, everyone. Have a nice day.
Thank you.